Hi there, this is Simon, personal finance coach. Trump's election, followed by Republicans taking the majority in the House and the Senate, already sparked a flurry of publications about what Trump's administration means for your money. Majority of these publications are focused on taxes. In this video, we will dive into other money-related topics that are expected from the new administration. So in addition to taxes, we will also assess expectations on changes to Social Security benefits, health insurance, prices and inflation, credit card interest rates, student loans, housing, stock market, and cryptocurrencies. In the interim, please subscribe to this channel to get notified on the future videos. We do not know for sure what Trump and his administration will do once they take the office in January. We can only make assumptions and set expectations based on the information that we heard so far. First, starting with taxes. In Trump's first term, a Tax Cut and Jobs Act was passed in 2017 that provided lower tax rates, higher standard deduction, and bigger child tax credit. This took effect in 2018 and is scheduled to expire at the end of 2025. The expanded list of the provisions expiring in 2025 includes lower individual tax rates, higher standard deduction, bigger child tax credit, higher estate tax exemption, lower SALT limit, higher AMT exemption, 20% qualified business income, opportunity zones, and bonus depreciation for real estate investors. In addition, Trump proposed new tax cuts to eliminate taxes on Social Security benefits and eliminate taxes on tips and overtime. Trump said he wants to make taxes go down, so he will likely to try to renew the expiring provisions. The problem is that renewing and expanding all of the 2017 provisions is estimated to cost significantly, at $4.6 trillion over a decade. Some economists worry about cutting taxes too much will increase the deficit. Others believe tax cuts will spike up the economy. With approval from Congress, Trump could extend 2017 tax cuts or some of them and introduce new provisions. So Congress is going to have a tough job of picking and choosing which provisions to save. We're going to have to wait and see if Trump makes good on the promises, but many believe that he is going to do that. Next money topic is Social Security benefits. As we know, the current projection for Social Security trust is to become depleted in 2035 with a 17% benefit cut for people receiving Social Security benefits. Trump has said that he will not cut Social Security benefits. Realistically, however, the Social Security Trust runs out of funds in 10 years, and Trump can afford to do nothing but defer the next successive administration to deal with the benefit to revise the Social Security problem. Next is health insurance. In his first term, Trump tried to repeal the Affordable Care Act, Obamacare, but he failed to get the Congress to support it. On the campaign trail, Trump said he wants to promote choice and competition and make healthcare more affordable, yet no details have been provided. It is possible he's going to try and repeal the act again. If his administration comes up with a plan, we'll see how successful he will be in the second time around. Then there is Medicare. Trump said he wants to strengthen Medicare, and he also wants it to pay for home health services, also known as long-term care, but he hasn't said any details about implementing those, so we'll have to wait and see. There appears to be a lot of enthusiasm in Congress to preserve and improve Medicare, so we can expect legislation in this area by the Congress. On the other hand, while Trump has been very favorable about enhancing Medicare for retirees, he said he wants to cut Medicaid, which is benefits for the poor. We'll see if Congress is going to go along. Next is prices and inflation. There are two Trump initiatives that may lead to higher prices and inflation: tariffs on imports and immigrant deportations. Trump said he wants to increase tariffs on imports for countries all around the world. Many experts don't like this idea. If everybody is imposing tariffs against everybody else, the cost of everything you buy is going to go up dramatically, leading to price increases on everyday goods and rise in inflation. We can expect that Trump is going to increase tariffs. What products and from which countries, we don't know yet. We're going to have to wait and see. On the illegal immigrant deportation initiative, Trump's proposal for mass deportation could increase food prices. Undocumented immigrants often work in agriculture or food processing, contributing to a labor shortage if they are deported. Yet again, we will have to wait and see how massive the deportation effort will be. Next, credit card interest. Trump said he wants to cap interest rates on credit cards. He wants credit cards to charge no more than 10%. The economic implication is massive. More Americans get more of their debt funding from credit cards than any other source. A big number of Americans who currently have credit cards are going to lose them. If companies like Visa can only charge 10% to everybody, then they are only going to give credit cards to those people who are not going to default. People who have less good credit rating will lose access to their credit cards. So Trump might get his wish by capping credit card rates, but it is going to have a huge negative impact on the economy. And the credit card industry is going to fight this intensively. Next, student loans. Trump did not like student loan forgiveness and is likely going to put a stop to Joe Biden's efforts to cancel student loans. If you owe money to student loan debt, you need to assume you are going to have to repay it. Next is housing. Trump's policy platform says that his administration will promote home ownership through tax incentives and support for first-time buyers. It also mentions opening limited portions of lands owned by the federal government for new home construction. Trump has not yet elaborated on this platform. The Trump administration will likely cut red tape and regulations to encourage businesses and real estate developments. As for mortgages, more affordable rates could come from the Federal Reserve decisions on where to set interest rates based on inflation trend. These initiatives will definitely promote home ownerships. On the other hand, the plan for mass deportations of illegal immigrants could shrink the labor force in the construction sector, putting strain on housing constructions and prices. Next, stock market. The stock market historically has performed well under most presidents, regardless of the political party. Out of the past 12 presidents, 10 saw positive stock market gains during their administrations. This suggests that stock market in general is not heavily dependent on election outcome, other than certain sectors that are impacted by policies such as lighter regulations on businesses, tariffs, oil drilling, and interest rates. Next, cryptocurrencies. Trump has pledged to make the US the crypto capital of the planet. Overall, the crypto industry anticipates a more favorable regulatory environment under Trump's administration, potentially leading to increased adoption of cryptocurrencies and market growth. However, experts caution that the market may face volatility if Trump doesn't deliver on his promises quickly. The bottom line, it's important to know that the actual implementation of Trump policies depends on various factors, including congressional approval and potential compromises. The overall impact on your money will depend on your individual financial situation and your investment portfolio. Please subscribe to this channel for notifications on future videos, and thank you for watching.